Alright everyone, this is Ryan aka Kenner & Clark, and this is going to be the new Blockroot's Market Profile and Order Flow program. So in this course we're going to be taking a comprehensive look at both tools, and in the end this should help us build a robust trading approach and foundation that is actually fit for all markets. So we already have a ton of content on the roadmaps portion of the website. We have plenty of modules on order flow and market profile. And for the sake of this course, if there's anything that you need to brush up on, any specifics with regards to theory, something like, let's say, auction market theory, you could still refer to the roadmaps. This is just going to be more of a chronologically ordered approach to both of these subjects. So just a general overview of what we're going to be covering. Within market profile, we're going to first go over what the time price opportunity chart is. So a TPO chart or market profile chart, that chart that looks like a Gaussian distribution, hopefully if it's balanced. So we're going to go over how this chart is constructed, the features of this chart, some of the things that we can omit within this chart that are used in traditional markets that are less applicable in crypto. Then we're going to go over the purpose. So why do we use market profile? Why do we use a TPO chart rather than just looking at a line chart or a candlestick chart? We're going to be talking about the concept of developing value. This is very important. This is what we are always looking to find, where value is developing. And we're going to talk about key contextual levels and inflection points. So these are the significant areas within market structure. And we don't only need to look at things like weekly closes and daily closes and areas on the candlestick chart to be able to form some type of idea as to where these levels exist, where this interaction can be expected. And we're going to be talking about environment types. And lastly, the finer details of market profile, some of the things that are a little bit less frequently talked about, things like anomalies and inefficiencies and so forth. Moving on to order flow, some of the general concepts that we're going to first cover. The footprint chart, we're going to go over how this is constructed, what we're looking at, what we're looking for. We've covered this before on the roadmaps within one of our modules, but we'll cover this again. Second, we're going to go over volume profile. So this is something that is very similar to market profile, except rather than just presence, we're talking about participation in a zone. So the amount of volume over the profile. Third, we're going to be talking about delta. This is something that we're going to be referencing quite frequently. So what delta is, what we're looking for. Fourth, the idea of positioning. Positioning is one of the most important aspects of our trading approach. Looking for poor positioning, for example. Fifth concepts we're going to go over: auction, exhaustion, and absorption. These are things that we constantly reiterate. And again, some more of the behavior that we're looking for from the levels that we are determining to be important from something like market profile. And then lastly, we'll go over momentum. And this is just the general overview, but we're going to get down into the specifics. As we break it down, we're going to cover mapping your environment. So this is sort of your higher time frame reconnaissance, looking at the environment, looking at where your reaction zones are, understanding context. So this is one of the most important things with trading. So this concept is thrown around quite frequently and not everyone understands the concept of context. We want to figure out how to identify who is in control. So again, this is one of the most important things. Who is in control? Sellers in control, buyers in control. How do we take advantage of recognizing that early? Locating contextual risk and reward. So not just any risk and reward. We're talking about major contextual risk reward, where the cards are heavily in our favor, where we are in a really good area to define a position, not just kind of pulling out risk reward out of thin air. We'll talk about entry methods, exit methods, and worst case and best case. Okay, so worst case scenario, best case scenario, these things you should have an understanding of while you're in a trade. And then we'll have a rundown of some of the more popular strategies that we use. So swing failure and traps, imbalance positioning unwind, the concept that I refer to as the heavier aggressor. So you'll have an understanding of what the heavier hand is, but I want to talk about the heavier aggressor and what that setup is. High-low absorption and auction reversal, breakouts from balance, inside day breaks, very similar. Fake out unwinds, we have an entire roadmap module on this. The 76% value rule. So this is a modified crypto version of the 80% Dalton rule. Double distribution reversal, and then event-driven trades. And these strategies are just a handful of what we will ultimately, once the entire course is put out, be iterating on moving forward. So the point of the course is to have a chronologically ordered, appropriate step-by-step approach to both of these strategies, or rather not strategies, both of these tools. Okay, because market profile and order flow, they're not strategies, they're not systems, they are just tools.